Thank you for coming. And we have a number of things we have to cover this evening. And we're going to move right along, and we call the meeting to order at 6 PM. The first agenda item we have are the Finance Committee minutes of March 26. I have not heard back from anybody. Do we have any
I move
corrections?
I
They
move your
were fine. I
acceptance.
read them.
Okay.
Second.
And Diane, second. All in favor?
Aye.
Aye.
Anybody opposed?
Going to abstain because I wasn't here.
Okay, and unanimous? Accept? Rich? Was absent. Okay, perfect. One of the principal issues that we have to discuss is the audit. And, it's good that we've had an audit firm for many years, the same firm. And we look for your advice, direction, and comment on what we do. And is this the gentleman that's going to present the audit? Joe Collins and David Irwin, and we call on you to discuss the item.
So does everybody have a copy of the report?
Yep.
So we'll start with the large report, the financial statements. It's 45 pages this year. Oh, yeah. Get one every year, Okay, so if you want to go in to page 3, even our opinion would be longer. Page 3, 4, and 5, it says independent auditors report at the top. And this is the opinion that we issue over the financial statements. The opinion is right there in the top 2 paragraphs. It just points out that we audited your 2024 year. We issued a clean opinion, so unmodified, no modifications. Financial statements are in accordance with accounting principles generally accepted in the United States. No material weaknesses, no significant deficiencies, and they accurately represent your financial position at that time. So and all of that, the Governmental Accounting Standards Board has us say in about 3 pages what I just said in about 2 sentences. But a good clean opinion, just like in the past. So good finances here at the town. Page 6, it goes on for quite a few number of pages. It's the management discussion and analysis. It's required to be included in your financial statements as required supplementary information. And it talks about the basis of accounting that you have, what the different statements mean, and it goes on and talks about various different things. But we're going to go over all the numbers anyways. So we can bypass the page 6 series and we can go right into page 7. Okay. Now, there's 2 primary bases of accounting inside your financial statements. Pages 7 and 8 are full accrual basis of accounting. Page 7 and 8 are required in order for us to issue a clean opinion. Pages 9 and 10, that follows the modified basis of accounting. Okay. The primary difference between the 2, full accrual basis of accounting requires us to put your fixed assets on the books, requires to put the total value of the debt obligations that you have and plus any other long-term liabilities that you have, such as your OPEB and your net pension liability. The modified basis of accounting on page 9 and 10 look at a near-term resources coming in and going out. So when you budget for a fixed asset, it is recorded as an expense as opposed to being recorded onto the balance sheet and depreciated over its useful life. When you budget to pay down your debt, the debt is an expense as opposed to a reduction of a liability on your balance sheet. Okay, so that's the primary differences. So on page 7, full accrual basis of accounting. Cash at the end of the year was about $11.8 million. Okay, you have many cash accounts here. The bank accounts were all reconciled timely. We confirmed the accounts independently, directly with the institutions. We didn't have any issues with it. We look at a lot of your revenues going in. We look at a lot of the expenses going out. And we didn't notice anything unusual. So everything that ran through your accounts was related to the operations of the town, okay? The investments that we have, that $2.8 million, that's money on deposit with Bartholomew Investments. We confirmed that directly with Bartholomew. Those are recorded at fair value, and everything was recorded properly in the general ledger and agreed on the investment statements. The receivables, $1.4 million, it's a mix. You're going to see it's going to break down a little bit once we get into the notes, but the receivables is money that's owed to us off of grants, like Chapter 90 money that comes from the state. And it's also money that's owed to us off of your real estate and personal property taxes, okay? Everything was fine. All the calculations were right. Everything agreed to the general ledger, and we didn't notice anything unusual. Then we get down into this thing here in this non-current section, and we got this crazy accounting thing that we got to do for your leases. A lease receivable net of current portion, $1 million. The GASB and the FASB for that matter, because the for-profit, the nonprofit, and the governments all have to comply with these rules. And they said that if you enter into these long-term lease agreements, which we have with the school upstairs, because they're renting from us, then we have to measure or figure out how much they're going to pay us over the life of that lease, discount it back to today's dollars, and put that total value on your balance sheet to recognize that long-term receivable. Now, at the same time that we do that, we offset that down in this section down here called, down in the liability section, you can see, it's called deferred inflows of resources related to leases receivables, that $1,020,000. We record the offset to that down in the liability section, so there's no real impact to your equity. So really, what the GASB and the FASBs are attempting to get at is they want all of these things out of the notes, which they've always been in your notes to the financial statements, and they want them sitting on the face of your balance sheet. So it's taken the same approach as what we did with the net pension liability and the OPEB liability, and now we're doing it for lease obligations, whether they're operating leases or they're capital leases. But we've been doing this for quite a few number of years now, so this isn't unusual. And we actually audit the school that's upstairs, and the value of the lease obligation that they have on their books agreed to the value of our lease receivable on our books. I wonder how that happened. But anyways, so they record the same thing. Just
You didn't give us any confidential information, though. Okay.
But anyways, that's what that means. Capital assets, $33.7 million. That's the total cost, less accumulated depreciation. And we do have a note on that. Yeah, we did have a lot of additions that we made to your fixed assets, okay? We had over $3 million of fixed asset additions that we capitalized. And we put that detail in your management discussion and analysis, so you can kind of see what it is. It's on page 6-6. You got to go back a couple pages. It's also included in the notes going forward, but we kind of detailed it out, exactly what you bought, roof replacement, tennis and basketball court improvements, police cruisers, sewer cameras. And then we have a lot of construction and process going on with the Park Street pump station, some bridge work, chime tower, and the Stockbridge Road dredging project. So a lot of activity within inside of fixed assets. But we traced the copies of invoices. Everything was fine. They agreed. Everything was recorded properly in the general ledger. So no issues there. Okay. Then the second section on your balance sheet here is this thing called deferred outflows of resources. And if you go down a little bit, we also have an offset called deferred inflows of resources. Okay. And I'll talk about that in just a minute. But down in the liability section, warrants and accrued payables, everything was fine. We didn't have any issues. We look at the transactions that happened beyond the June 30 date, and we make sure that the town did in fact reflect all of the receivables and the payables that belong to the 6/30/2024 year. And everything was fine. We didn't have to make any additional adjustments. So Mike's finance department did a very good job with all of that. And then we have debt. We made all the payments on our debt. We actually paid down quite a bit of debt this year here. And we'll see that once we get into the debt note, but everything was fine. Payments were made. Everything was done good. So all the debt is confirmed directly too, so we didn't have any issues there. Okay. Then we have these things called the net pension liability and the OPEB liabilities. Okay. The net pension liability is from the retirement system. We get the actuary report from that system and we just lift the numbers right up out of that actuary report. And we report that information on the face of your balance sheet through a journal entry, reporting entry actually on the financial statements. And then we disclose certain information that we're required to disclose about the pension system. Okay. And all of that stuff is in the notes. Now, we have these deferred outflows and deferred inflows of resources, and those are connected with those calculations. And basically what it is certain pieces of those calculations can be measured and recorded immediately into expense. So for example, if the actuary estimates that your investment portfolio is going to go up or down by a certain amount, whatever the actual amount was, we'll recognize that actual amount in the upcoming year. There's other portions of that calculation that are long-term that look way out into the future because they deal with mortality. They deal with whether you're male or female. They're guessing at when people are going to retire or when people are going to pass away and all that stuff. So those portions of the calculation can change massively from one year to the next. Just a change in the discount rate that they use to apply it against a liability can have a massive impact on these liabilities that we're recording on the face of your balance sheet. So what GASB came up with is they said to smooth the impact to your income statement so that your net income is not going up and down wildly. They said, we're going to take certain pieces of that calculation and we're going to park it temporarily onto the balance sheet in these sections called deferred outflows and deferred inflows, and then we'll smooth those into the income statement over a closed period of years, somewhere between 5 and 7. All of this stuff comes from the actuary. That's as best as I can explain it. I'm not an actuary. But the actuaries are required to comply with certain GASB standards. And we get a copy of their report. I think we use Parker Elmore for our OPEB. Obviously, the retirement system, we're using PARAC. We're required to use PARAC because they're the only ones that do it. And I know that the report on the OPEB, it's like 60 pages long. It's a tremendous amount of information. And he goes through all these calculations and we got to review it and look at it, make sure things look copacetic and
We do it
are
every year.
consistent from one year to the next.
Every year.
And then we,
Report from them.
yeah, and then we just lift the information right out of it and make sure everything looks fine and we report it in the financial
But
statement.
all of this information, David, is the picture as of 6/30/2024.
That's exactly right.
Correct.
Yeah, that's
Just
exactly
to
right.
emphasize that.
Yeah. That's exactly right. And yes,
Says that at the top.
I know it.
Well, compatible with this
Right.
audit. That-
okay.
Right, exactly.
Make it clear to.
That's okay.
Is there a public that's listening other than Clarence?
Yeah.
That's fine.
Yes, Denny.
Yeah, the actuary, the actuary that we use for the OPEB does it runs their calculation coinciding with the fiscal year that you have. So it's as of June 30, 24. The retirement system is 6 months behind us because they're a December year end. So while we're reporting at June 30, 24, the pension liability is recorded as of December 31, 23. But okay, so total assets minus total liabilities, factoring in these crazy deferred inflows and outflows, which I feel as though they should have left in the back and just brought one number forward, but they didn't, gets us down to our net position. Then we break our net position down into multiple categories. Okay, we have about $23 million tied up in our fixed assets minus the debt that we incurred to get those assets in place, right? So you're not going to sell that. So those are kind of pretty much fixed in place. Then we have money that we've received, community preservation funds, capital projects, special revenue funds, grants that we received that you got to spend it on very specific things. So those are restricted until you meet the spending restriction on that. And then everything that doesn't fall into those categories falls into the unrestricted bucket. And unrestricted is positive $6.8 million. Town's a very healthy town. When you look at the statement of net position on a full accrual basis for some of these other communities, they had the net pension liability and the OPEB liabilities are massive numbers. And it pushes the unrestricted net position to a negative, quite large. So the fact that you have a positive unrestricted net position and still accounting for the offsets of the net pension and the OPEB liabilities is very good. Now, the towns is excellent from the standpoint of how well you funded your OPEB. I think, I don't know what the other town is, but I think there's only two in the state of Massachusetts from what I
There are
understand.
very few. There's like 3 or 4 that,
So, the town, it's very good that the town, you know, when we had to do that, took that very seriously. It was very good. Okay. Page 8 is the income statement. And there is the GASB is actually working on kind of reorganizing the format of page 8. I don't know what it's going to look like yet. It hasn't been passed yet. But my hope is that maybe they can put the revenues before the expenses the way that you would look at it from a normal income statement, but I don't know. But this is full accrual basis. So all your debt payments are offset against the liabilities in the balance sheet. We're recording expenses that aren't cash based inside that expense column for your pension and your OPEB liability changes in those liabilities from one year to the next. Depreciation expense, we're recording in there. It's not cash because you spent the cash when you acquired the assets. Okay. So this is full accrual basis of accounting. I'm just going to point out a couple of things. The rest of river settlement that you can see there, $1.7 million is kind of at the bottom there, $1.71 million. So we got some rest of river money settlement that came in. And I was chatting with Mike, and that's the only money that will come in off of this rest of rivers settlement from GE. Okay. And obviously net position or change in net position is $2.6 million positive. And then getting to your net position at the end of the year, $38,326,000. That number there ties back to the bottom number on the page 7. And that's how those two statements talk to one another. Okay. But let's turn to page 9 and 10, because out of all of the financial statements, on all the pages in the financial statements here, 9 and 10 are the ones that I think you should always want to focus on, because they're modified basis of accounting, and it mirrors very closely on how you budget with revenues coming in and expenses going out. Okay. So if you were to have Mike print out the general ledger reports out of your accounting system, they would match these things here. Okay. Page 9, modified basis of accounting, balance sheet, cash is always going to stay the same. Your investments are always going to stay the same. Receivables are always going to stay the same. And you can see here now we've broken it up between the funds. The general fund, $635,000 is taxes receivables. That's real estate, personal property, motor vehicle, and what's the other one, Joe? The people that don't pay their taxes. The tax titles. Yeah, that's it. So it's people that are in tax titles for that. And we have a note on that, okay? And then the non-major fund, $833,000, okay? That is grant money, okay? And that's owed off of Chapter 90. We spent the money in 2024. We got the money just after the end of the year. So because we spent it, we don't want to record negative fund balance. So we record the value of that receivable to offset that expense. And that's what that is. We got the money in, okay? And then obviously down on the liabilities, exact same thing. And you got to notice this thing here. We got these interfund payable, and then up in the assets, we got interfund receivables. And that's really connected with waiting for that Chapter 90 money to come in. So one fund kind of floated cash to that other fund waiting for that receivable to come in. Okay. But once that cash came in at the end of the year, those were cleaned up just after the end of the year. And then revenue not considered available. That is unique. That's modified basis of accounting. And the state of Massachusetts says, if you do not have the cash, you can't recognize the revenue. Okay. They make one exception. It's a 60-day rule. They say if you do collect a certain amount of taxes within 60 days after the end of the year, then we can reduce that amount and recognize that as revenue to offset the expenses. But the rest has got to stay as uncollected. It's still a liability. Unearned revenue is what it is. And then you go down, the total assets minus the liabilities and uncollected revenue get you down to your cumulative net position. of $15.4 million. Okay. And a lot of it's tied up. It's restricted because it's got to be spent for community preservation, capital projects, and various federal and state grants. Okay. But the unassigned fund balance is $3.7 million. The unassigned fund balance does include stabilization fund money. Okay. And then the committed and the unassigned, or the committed and the assigned fund balance is the town would have voted to use free cash for the fiscal 25 year. And that vote was taken before the end of June 30, 24 year, because your annual town meeting is in May. So because of that, we have to pull that out and put that already in as the fact that that amount has already been committed. Okay, so it's out of the unassigned fund balance. And then the committed fund balance is a reserve for expenditures and carry forwards and stuff like that. Okay, but Mike's team gives us all the backup and all the support, and those numbers agree right to the trial balance. And Joe and I had no problem with any of that stuff. Okay, and I know there's a lot of stuff. The bottom part of that, the 15.4 million, is a reconciliation back to the full accrual basis of accounting. Okay, so count for fixed assets, right, which we capitalize, debt, which we put all of the debt on the balance sheet instead of treating it all as an expense, and so on and so forth. Page 10. Well, once I get out of page 9 and 10, it's going to go a little bit quicker, okay? Total revenues for the town, the general fund, it was $11.5 million. When you bring in the CPA fund and the non-major funds, that gets us to a little bit over 14 million total revenues in grants and stuff like that. Total expenditures for the town, $17 million. Okay. Now you're going to see in the general fund, we have a deficit of $1.8 million. Okay. But remember, the town voted to use a certain amount of free cash to cover the operating costs of fiscal 24. Well, when you vote to use free cash, you're really using fund balance, right? Revenues minus all your expenses, surpluses that you've accumulated over the years. Well, we can't account for that use of the fund balance or the free cash to cover the operating expenses as a revenue source a second time. Okay, but you'll see when we get all the way back to the end, there's a budget versus actual, and you'll see money come in off of the operating transfers, money coming in, and revenue appropriations to offset that deficit. Okay, so that deficit was covered with those uses of money. Then we had that Rest of River money come in off of the GE settlement, and the net change on fund balance for the general fund was just about $100,000 there. And then the other ones, it's bad, but it's really not. The capital project fund, okay, it's a negative $1 million. Same thing with the non-major funds, a negative 182,000. But if you go down to the bottom there, you got fund balances in the capital project and the non-major funds, okay, of positive 5 million and positive 2.4 million. So we received money in the past that we recognize as revenue, but we didn't spend it yet. And now we're spending it. So it's just a timing. It's crossing fiscal years on us. So usually that happens in these non-major and capital project funds. You get money in 1 year and spend the money in the next. Okay. What you never ever want to see is your ending fund balance would be negative. Okay. And we're nowhere near that. Okay. Page 11. No, you got one reconciliation saying that one way.
Just 1 sec. Dave.
Oh, yeah.
Michael, that's where he had, on the other funding sources, the Rest of the River, that particular 1.7 million, that's where it appears. That was a question to ask by Bill Vogt. So, well, it's
Sure.
not a problem.
Oh, okay,
I
good.
think Bill felt we probably should have had a bigger portion of the settlement, but
Oh, right.
that's a whole separate, that's a different discussion.
Well, we did audit the number that you got.
Yep. Thank you.
Okay, page 11 is just another reconciliation, just looking at it from the current year. So we're capitalizing fixed asset additions, we're offsetting the debt payments against the debt that's residing in the balance sheet. So exact same stuff. So we can kind of bypass that one, page 11. Page 12 is your fiduciary. We have money that's set aside for our OPEB. $4.3 million, fair market value as of June 30, 2024. And that money is sitting in, prim, right?
Yeah.
The pension reserve.
Yeah, the pension reserve. Okay, and that's that $4.3 million that is there. And last year, if you go to page 13, last year was just under $4 million, so it grew by 376,000. Realized and unrealized gains and losses and interest and dividends, okay? Okay. Okay, now we'll be able to speed through. All right. Oh, yeah.
Michael, what kind of reporting did you get from Prim about the yield on those funds? Are we getting it monthly, quarterly? How are we getting?
I thought it was monthly, but I'll confirm.
Well, you will get your statement, the statements from.
The statements come monthly?
Yeah, they should. I don't believe they come quarterly. They come monthly. Yeah.
Okay.
So, and I'm assuming that so we record the interest and dividends that are earned from one month to the next inside the general ledger. I don't know if that's the question that you had.
Well, the question is, what does it look like today?
Oh, yeah, I have that. I got that number.
Good.
Because I remembered your question from last year. It's close, it's not exact. But as of February 28, that was the one that I had when I issued the draft.
Yep.
And now where are we at? We're in April, so I can probably get the number for March and update that note, because these are only drafts. But on page 33, I remember you had asked that question last year. So the value of that portfolio as of February 28 was $4,574,000. So it's up another couple $100,000 since June 30, 2024. And we'll bug the treasurer tomorrow and we'll see if we can't get the March and we'll update. the
From
numbers in
June,
March.
June 30th to December 30th? Is that
To February.
From
30, 24 to June 30, 25?
June 30, 24 to February
February
2025. Yeah, it increased by about 200,000.
If you might, David, on page 20, can we
Yeah.
go back to 20?
Yeah.
The custodial credit risk, deposit risk.
Yeah, it's not very.
Can you explain, it's not totally clear.
The note is supposed to say that the town carries deposits that can be insured and uninsured and or uninsured. And then my last sentence is that all your bank deposits were insured. So there is no uninsured deposits sitting inside your banking institutions, the Adams Community Bank, the Leader Bank, where was the other bank? We got a couple other banks here. Unibank, okay, East Savings Bank. All right, all of those were under the FDIC and DIF coverage. So all your cash deposits in those institutions was insured. I'll correct the language to make it very clear.
We probably should take the uninsured out of
Yeah,
there.
I
Because
agree
if
with you.
everything is insured, it's clean and it's,
Yeah.
it
Yeah.
causes questions.
Oh, yeah,
Okay?
no problem. Yeah, I can
Thank
make
you.
that change. Okay, now, your investments are different now though, right? Because what you have sitting inside the stock market is uninsured.
Uninsured.
Because if that stock market goes up or down, you gain value, or lose value.
That's correct. Not insured,
That's correct.
I mean, the OPEB funds are not. they're
with the
not insured.
exception of equities and correct.
Yeah.
Yeah.
And yeah, and if you were to actually go for your OPEB, you got 4.5 million as of February, right? But if you go to their website, they say everything is uninsured, no collateral, no
That's
FDIC. So if the stock market tanks, that tanks with it. But I think I don't remember what they had as of June 30, 24, but I think as of June 30, 23, when I looked at it a year ago, it was something like $9 billion in assets under their care. So it's massive. They got a ton of towns and communities that are in there.
They have all the pension funds,
Yeah.
Right.
It's
everything
huge.
by statute
Yeah, that's right.
mandated.
Gotta be careful when we're on Steve. Catches me.
You can watch Elon Musk for the gain and loss on billions of dollars. Did that?
Yeah. That one there is, okay. So back to page 14. these describe all of your accounting policies that you have, how we recognize revenue, how we capitalize fixed assets. All of the accounting rules, methodologies that we followed in this year is the exact same way that we followed it in the past. So nothing new was adopted. So everything was fine. The accounting is all the same. So all this information is exactly the same as the prior year. Okay, so we can kind of go past all these notes. Everything is the same here. We can go right up to page, I guess we can go to page 21. These ones are moving pretty quickly, okay? Page 21, that $2.8 million, that's the money that we have in deposit with Bartholomew. And the accounting principles say that you got to record your investments at fair market value, and then you got to drop it into a bucket called level 1 or level 2. Level 1 is anything that's pretty much publicly traded and you can see on the stock exchange. Level 2, the corporate bonds fall into level 2 because that's where GASB categorizes them, I guess. But this information comes right off of your investment statement. And that's where you have your money invested. And then that $2.8 million, you can see down below that we have that money sitting inside the general fund, stabilization funds, and inside the CPA fund money is up in Bartholomew, and our trust funds are in the Bartholomew investments. Okay. And then the bottom of that page just says that our OPEB money is sitting up with Prim, and it follows theirs, and they're accounted a certain way under a net asset value method. And we got $4.3 million up there. Okay. Okay. We can kind of move a little bit quickly.
Do you have any idea whether or not Prim is also limited by the so-called Massachusetts list? The list of permitted investments?
I don't know the answer off the top of my head. I would say that it is. I mean, I can't see that it couldn't be because everything is overseen up there by the state treasurers, and they would have to comply with what's inside Mass General laws, right? Because it's created out of state legislation. So I would imagine, but I'm not 100% positive.
Do we know there was a list of equities, Michael? They publish a list of equities every year that they're permitted to invest in.
Of what you're allowed to invest.
What you're allowed to invest in. Have you ever seen that?
I've seen it before.
A long time, yeah.
Yeah.
Yeah, it's been a long time for me as well. I mean, there's some anomalies in it, and it's because they don't update that list. While the battle was going on with GE, believe it or not, General Electric stock was a permitted investment.
Oh, wow.
It was insane.
Yeah.
So it's
Yeah.
it's not as foolproof as one would think. And in a market like this, who knows? Can we get a copy of the investment list? Michael? Not this minute.
I would think that.
Yeah, you can get it. You can get it off of their website.
Oh, it's
I know
on their website?
Yeah, I know.
Oh, I'll look for it. That's okay.
If not, just let me know and we can.
Yeah, sure.
Yeah.
That's fine.
Hopefully they're not invested in a Tesla.
Don't be surprised.
Okay. Moving on. Okay, page 24 is your capital assets. Just to kind of give you an idea, the capital assets up at the top are all recorded at cost, right? Historical cost, whatever we paid to put those in place. We've recorded depreciation on those over the lifespan. There is a depreciation schedule that we had that calculates all this stuff out and everything was fine. But you can see there, construction and process and $1.1 million in additions, and then capital assets that were put right into service, 1.8 million. So it's a little over $3 million there. Okay. So a lot of activity in your fixed assets this year. Page 25, if you get, we started the year with about $12.5 million owed. We paid down 1.9, almost $2 million to get us down to 10.5 million. And you can see that the water treatment plant loan and the town building loan were paid off. That's very good. Okay. All right, and then, the rest of the stuff going forward, just, is information about the net pension liability and OPEB. So we'll just look at a couple pieces in regards to those. So if you want to flip over to page 30. Um, all this information comes right out of the pension system. We're required to have certain information disclosed in the notes. One of the pieces that we're not required to have is right there in the center of the page, Berkshire County Retirement System, and that $12.5 million net, what their net pension, unfunded pension liability was as of December 31, 23. This comes right out of the retirement system. We put that in there because it kind of makes it easy to see how we calculated that $419,000 hours. We're about 3.3% of the entire retirement system of all the employers that are in there. It's a straight calculation. We get the percentage rate from the information that comes from the PIRAC and the actuaries. And we take it and we multiply that 3.34% by that 12.5 million, and that's the number. So the driver obviously behind all of those calculations is payroll. Okay. And then it goes on to page 31. And basically what page 31 is saying is, hey, look at, if the actuary used a discount rate with 1% higher, 1% lower, you could have a massive swing in these liabilities. So it's just kind of pointing out that it's an accounting estimate. Okay. A legitimate liability, legitimate obligation. There's no doubt about that. But it's an accounting estimate because a lot of it is projected and estimated. Okay. And then on page 33, the very top statement there is the other post-employment benefit liability. Our projected obligation benefit payouts is about $4.6 million. It comes from the actuary there, based on all the census data and, projection of what health insurance is going to do and all that stuff. We got $4.3 million set aside as of June 30, 24, giving us an unfunded liability at $353,000. So, and then you can see at the bottom of the page, if the actuary used a discount rate that was 1% higher, you would have been in a positive position instead of an unfunded position. But that's all thanks to the town being very aggressive in funding that account. Okay, and then page 35, real quick. Now, page 35, this page here it's your budget versus actual, okay? This actually used to be last year and in previous years, it used to be included way up at the front. Well, GASB came out, I guess they did come out with a new pronouncement, and they said it didn't go into effect for June 30, 24, but it was going into effect for June 30, 25, and you could early adopt. So we just went ahead and early adopted it for all of our municipalities, and we pulled it out and we put it as required supplementary information in the back. So, but this just kind of stacks up your budget versus where you were spending wise against that budget. Okay. And you can see, surplus revenues, 380,000, and, expenditures, underspending some of the budget line items, 359,000. Okay. And then you can see the rest of river settlement money went right into the general fund. So that's that $1.7 million coming in there. And I think that's it. The rest of this stuff is, I want to go over one more page because it's very good for the town. Page 43. This is the township is very proud of this. The treasurer collector does a great job. You can see the real estate taxes for the 24 year, the commitment was almost $8.9 million, right? The uncollected receivables at the end of the year, when you account for refunds, abatements and stuff like that, it's only 250,000. So that's 3%. That means 97% collection. And if you look down below the 2023, only $3,700 is still uncollected on the 23 year. And that's it. So the town does a very good job. You got very good citizens living in the town, or you're tax collector is very aggressive. But very good. Same thing with your personal property, high collection rate. Motor vehicles is different. But you've always held pretty steady at 7 or 8% uncollected at the end of the year. You know, good high nineties, low nineties, I mean, collection rate. All right, that's the financial statements. We did have a couple of comments. There's a management letter. Okay, so one of the comments we asked Mike if he would be able to, throughout the year, identify the capital assets, you know, invoices, put them inside of a folder and then add them to your depreciation schedule as you go along. But we do it anyways, but it really should be identified by management, and then we should be auditing what management tells us. But we go through all your expense accounts and we search for these things anyways, but it would be nice to just search for the missing 1 or 2 items, not look for all of the additions. So Mike talked with the accounting department, he agreed, and he said that was a good idea. There was a transfer that was approved from the reserve fund, right, Joe?
Yeah, the reserve fund in the general fund, a portion was appropriated for the sewer.
Yeah, okay. And the transfer wasn't made by June 30, so we brought that to Mike's attention, and Mike said he was going to move the money just after the end of the year. And then the last one is, the reason that we put this one in here was that and it's funny, just about all the towns that we audit, we have the same issue. We always have to go in and put together the budget off of the annual town meeting warrant, and then we got to identify the revenues that offset the expenditures to make sure everything came down to a break even of 0. And all the information is there, but we got to pull it from different components, and then we got to bug the accounting department, and we got to bug Mike and say, you know, where did this happen? Where did that happen? So Mike agreed to just put together that schedule for us, so we don't have to do it. I'm making jokes like this. And that's it. Standard entries that we make. But
Is there any reason you need to talk to us without Michael here or?
no,
No?
everything.
That's fine.
Everything was fine. Everything was good.
Just to, been sort of nagging at me, when you started made your presentation about the balance sheet, you made reference to the fact that dollars of free cash was used to offset
Oh, yeah.
taxes. And I'd just like to go back to that to understand what actually happened. Because that's not my memory of what occurred, but
Sure.
you know, having said that, it probably did.
If you want to go to page 35. And it's hard to remember a lot of things, so I got to bring extra papers with me. You know, and you're pushing through a lot of towns at the same time. I want to be talking about Town of Lee when I'm at Stockbridge. 24. No, this is not it. That's not it. At the bottom of the page 35 there, when you passed your budget, right, you have revenue appropriations. It wasn't 1.8, I'm sorry. You had operating transfers in of $1,198,000, and you had revenue appropriations of $1.5 million, $1.6 million. And for the 2024 year, this is your tax rate recap sheet, and that number comes in right here, Steve. You voted to use free cash to offset the operating expenses for the town.
Was that the vote that was taken? Do you remember that, George?
Not to reduce that.
Okay, I'm all right. I'm just drawing a
It's,
blank.
well, I should be very careful when I say that. It wasn't to reduce the tax rate.
Thank you.
Right. No, it was money voted for particular purposes. Right.
Yes.
Yeah, that's a,
I think we should be clear about that.
yes.
Yes.
Yeah, sorry. It's a revenue source is appropriated for particular purposes.
Particular.
Not, yeah, it was not to reduce the tax rate. I'm sorry, Steve.
It's the operating budget, right?
Yeah, or, yeah, I'm sorry. Okay,
Because we never would have gotten this budget through the Department of Revenue.
yes. Yeah.
Okay, anything else?
Now, if you want, Steve, what I can do, on the bottom of page 35,
Yeah.
I can do, and just set, instead of just saying revenue appropriations, I'll say revenue appropriations for a particular,
Yes,
purpose,
Footnoting, yeah.
that would be helpful.
for particular. Yeah, sorry about that.
No, we haven't taken any.
Well, I should have let Joe handle that one. He probably would have gotten it right. Okay. So the only thing I need, if you're okay, I can make those changes in the drafts. So if you're fine in voting on this, with me making those,
I'll move it, approval of this audit subject to the changes that have been discussed at the meeting.
I'll second it.
good.
All in favor? Anybody opposed? Okay,
Thank you very much.
Yeah, no, you're more than welcome.
thank you.
And
Thank you, Michael.
I know I spent a lot
Make
of
us
time.
look good.
I spent a lot of time talking, but Joe is my right-hand man here. Joe actually handles all the field work, puts together the financial statements, and then I come in and review it. I guess I take too much of the credit when I should.
It wasn't giving you the credit.
It's good teamwork.
Yes.
No.
But no, the town is very good, so very nice audit in this town. So, very pleased to have this.
Excellent.
All right, so we're all set.
Thank you very much.
So I'll get these finalized with those changes and then I'll send you the finals and then we'll submit everything to the state tomorrow.
Great.
Thank you.
All righty. Hopefully that was the only thing on your agenda?
No.
Rotting wood.
Okay. It was nice seeing everybody.
Thanks for all your efforts on our behalf. Thank you.
Thank you.
Oh, yeah. That's true. Yeah.
Thank you.
Thank you.
Thanks again. Okay, the next item on the agenda is, we heard at the last meeting, a discussion of a consolidation of fire EMS services with Stockbridge and West Stockbridge. We have been asked by the preliminary committee to have a representative of the finance committee participate on that effort. And in that regard, I would like to throw my hat in the ring. My whole life really has been spent in the healthcare management, healthcare delivery, and healthcare system insurance. So basically, anybody have any comments relative to that?
I move you be appointed.
Second?
Second.
Okay. Any dissenters?
I thought we were voting for.
Yeah. All right, thank you very much.
You'll be glad to get rid of it.
You know, it's something just very briefly, I would comment on that, you know, I would like not to do it, but I really, I have to do it based on my background and what I've done with my life. I mean, this is it, along with my military service, so, okay. So the first on that was Stephen, and second was Jim. Is that correct?
Vice versa, actually.
Vice versa? Mm-hmm. Okay, thank you. Okay, next item. We want to talk about the operational and budget review. Michael, do we think that probably the best way to talk about the budget would be to go through Articles 4, 5, and 6 of the warrants, which deal with the, you know, with the budget per se? Does that make sense?
Sure, we can just go through and if there's any specific questions.
Okay, basically, Article 4 of the warrant document you have is the operating budget per se. And attached to that article is the detail of the operating budget of Article 4. Under the general government, we notice an increase of 2.1% or 28,000 from year 2025, projected for 2026. That is related to salaries and expenses, okay? The next category, public safety, shows a category increase of 34%. Increases related to police department expenses, fire department salaries, building inspector salaries. And for the building inspector, we will get income from the towns that participate with us. The only one that opted out was West Stockbridge. So that's the increase on that.
No, they haven't voted yet.
I'm sorry?
West Stockbridge hasn't voted yet.
Okay, but there was an indication they were going to opt out of it. Okay, so
So,
is that,
so there's been some concerns raised in West Stockbridge between their current and joining the proposed. I will be at their meeting, not for that, that's up to them to defend, they want it in. There's some disagreement between some of their boards and their select board, whether they should be. I've already, the other towns, we've all talked about it. Their contribution is 51,000. They'll be voting on May 5th. Myself and Vinny are going over to answer any questions about the fire EMS component, because we definitely approached them on this. Well, the building, they came to us and wanted it. So, yeah, we'll see. So, the finance committee did not support joining the shared service. The selectmen are fully in support. So I'm not exactly sure how it'll play out, but we will see after
the finance committee of West Stockbridge?
at West Stockbridge.
Mhm. Okay, all right, Georgia? No?
No, that's what I meant. They haven't voted yet.
Yeah, okay. But I mean, I probably misspoke. The indication was that they were not supportive of this portion of the idea. Okay.
Can I just ask one quick question? And I should have asked this before. Why is our building inspector salaries going down $271? I was going to try to look it up in the book, but.
That's our allocation for the effort. Is that a correct statement, Michael? The 32,000 is what we would pay toward this overall salary?
Yeah, but the building inspector salaries are all the other it should be worded better as inspector salaries. Maybe I should just drop the building part, because it's actually all the other inspectors that we have. I'm quickly looking it up.
Right. Okay.
Yeah, I'm looking at, let me get to that. If you want to continue, I will get that answer.
I see, yes.
Yeah.
Okay. Anything else, Georgia, on that one?
No.
Okay, moving on, education. We noticed an overall category on the education operating budget, capital budget of 5.8%. And the majority of that is obviously not in capital expenses. A lot of that debt has been retired. And those are salaries, basically salaries, school salaries.
Insurance.
Public Works and Facilities, the next one, increased 3.1% with salaries increasing in the transfer station, cemetery salaries, and sewer departmental salaries increasing, water department expenses. Okay. Moving on, Human Services, an increase of 5%. That is related to Tri-Town Health, Board of Health salaries, and Council on the Aging expenses, which makes sense, obviously, with an aging population. Culture and recreation, category increase of 6.1%. Principal increases in the library and the Memorial Day Committee. Library is the largest bearer of increased salary and expenses there. And debt service, you'll notice a reduction in debt. Debt has been retired. You know, we've paid off a lot of our debt. Employee benefits, this is something that will continue to rise. County retirement, as well as health and dental, that category is up 9.5%. And overall, for all of our operating departments, the increase budget for the operating departments, including education, is projected at 9%. And put that into perspective, the preliminary tax rate based on a 9% operating budget will be estimated at 3.5%.
Increase?
Okay?
So even though the budget's gone up 9%, the offsetting monies we're gonna receive from the other towns for those other
Revenue.
services that really drove our budget up
Correct.
are gonna come in, therefore the tax impact is 3.56. So.
Undesignated compensation, do you want to talk to the finance board about that or?
Yeah.
I was at the selectmen's meeting Thursday night and they talked about this, so I thought Michael should talk about it.
So, first, Georgia, your other question is, with the various inspectors and the backups and other stuff, we no longer have to fund money for backup building inspectors.
Okay.
Because we have a department now.
All right,
Yeah, that we're paying. So
thank you.
that answers that one. One of the discussions that happened early with the select board, was they talked about every year we raise $40,000 in undesignated compensation. They're typically used for retirement payouts when somebody retires from the town. So over the last 4 years, we've raised through taxation for undesignated compensation over $200,000. And we've paid out $49,000 in retirements. So one of the options that town has, and there's really only two options. There's only two options. One is you're carrying your operating budget, or you set up a special designated stabilization fund for retirement payouts. Those are your only two ways to fund retirement. So the select board, we've discussed about the possibility, that way we wouldn't be raising the money every year through taxation. We put it in this year, we're proposing to put 50,000 in a stabilization retirement account. And if no one retires, then the following year, it just sits there. So we'd only appropriate when there's actually an expenditure out of it, instead of raising every year the additional. Now, we did leave 10,000 in because sometimes, I'll be honest, the select board comes up with some ideas they'd like to fund. Like last year, they funded the person playing the bells at the chime tower. And we took the initial funds from the undesignated compensation. The idea is that they're trying something one year, and if it comes in and it becomes a regular occurring, it needs to go in the budget. But sometimes they come up with ideas that we might want to try something. So we left 10,000 in the undesignated, but then we decided to put the rest into a dedicated stabilization retirement account. So we go 3 or 4 years with no money coming out, we'll just leave the 50 in, it'll just sit there. Or you raise 40,000 every year and, you know, the difference would be 90,000 raised instead. So it's because we're still raising 10. So it's just, depends on how you want to do it. It really comes down to that. So the select board took the position of not raising it every year and just using free cash to initial investment, and then down the road, if somebody does retire and we spend out of it, we'll have a free cash appropriation to return it to the 50,000.
Which is what's happened in the past.
Yeah.
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 Okay.
So what are we saying? We're saying we leave free cash as it is as the support for this?
No, you'll see when we get to the articles, there's now an article in there to fund from free cash a
Right.
designated
Correct.
stabilization retirement account.
Right.
Yep.
We'll come to that in a little bit. Okay. All right, any other questions relative to the operating budget at this point? And I think what we need to do is we need to take a vote on this. This has already been voted upon by the select board. So
I'll move that we approve the operating budget, Article 4.
A second.
first, second. Bill pass. All in favor?
Aye.
Aye.
Anybody opposed? Okay. Thank you. That's Article. Okay. Michael, do you want to talk about, before we get into the articles? I guess we don't need, we can get into the warrants and then we'll cover, the capital in the warrant, right?
Capital's right in the warrants.
It's in all the warrants, so we should probably
The questions from there, I got all the information, so any
We
questions?
should go through the warrants. Basically, Article 4, we have just approved. Article 5 is the 4 million for Berkshire Hills operating and there virtually is no capital expense. Can we have, I'd make a motion to approve Article 5.
I'll second it.
All in favor?
Aye.
Aye. Article 6, monies toward the capital component.
I will move approval.
Okay, number 6. Is
Second.
that you, Rich?
Yep.
All in favor?
Aye.
Anybody opposed? Okay, Article 7. All right. At the last joint meeting, the select board was looking for the finance committee to take a position relative to using funds from the OPEB fund, which was described by the accountant, as opposed to you to draw down on 155,000 in funds, as opposed to leaving the fund intact and getting those OPEB funds for retirees elsewhere. It is an article that has been supported by the select board. And the question we have today is, members of the finance committee, do we want to support that? And obviously, every year, we would go through another actuarial review of the status. 155,000 is a relatively small amount compared to the 4.3 million that's in there. I would open that up for discussion.
For purposes of discussion, I will move the approval of this article.
I would second that approval. Any discussion?
Yes.
Go ahead.
I don't approve of taking the retirement, health cost and so forth out of the OPEB at this time,
I agree.
that it should stay where it is.
I would third that.
Okay, so basically we have a motion and a second. All in favor? 1, 2, we have 2 yes. Opposed? 1, 2, 3, 4, 5, 6 opposed, 6 no. So action, no change.
And can I just ask a question? The total amount is in Article 4, correct?
155,
It's
142.
listed as other, you listed as other funding sources. So in the budget, when you get to other revenues, it's recorded in your budget book as an other revenue.
No, I meant the total cost of the retiree
Yes, the total
insurance
cost is
is
in there.
already in Article
In
4.
there, so you don't have to change
Okay.
Article
I'm
4,
not-
it
I'm
would
not
just
surprised.
not have this as money coming in.
Right, right.
Yes, sorry.
I just
Yes.
wanted to make sure.
Okay, so yet again, 2 yes, 6 no. And when it comes up and Gary says, what's the finance committee? The finance committee voted not to take these monies to support this. Okay?
Yep.
Article number 8, I don't think we need to act on that. There's no money in that.
Actually, I disagree with that.
Yeah.
I actually think you should. I gave you the information about what this is, and it was brought into effect in 2004 to investments, and whether or not the town wants to support this. You can see from the KP Law update that they sent out on this article. The Prudential Investment Rule, which essentially allows a broader range of investments, some of which may be riskier than otherwise would be allowed for investments in savings banks. So it allows an expanded role that the treasurer can invest money around this particular rules.
But following the prudent investment rules.
Yes,
Yeah,
yeah.
I'll move the approval.
So, yeah.
Second? Anybody?
Is there any way, excuse me, Jim, I'm sorry. Is there any way we can defer this until another meeting?
We can't.
It has to
Because
be,
You could do it at the baby. I don't see why you couldn't do it at the baby one.
yeah, we can do it at the baby, but there's no reason. Our approval or disapproval has no bearing on whether or not the warrant goes out in this form.
All right, so you want to defer to the
The only
baby
reason I
town?
want to defer it is, and I will
You want to
admit,
read the
and I
material?
will admit that I did not read, I didn't pay as much attention to this as I,
Well, I questioned it on my own sheet but now that you have this, I'd like to be able to read it
Yeah.
and think about it. So I think your
I thought I
ideas,
sent this to Jay the same guy.
I'm sure you sent everything out and we got everything. I will admit, I didn't pay attention to it.
well, I printed it. I didn't see it.
Okay, so committee, basically, you moved for the baby town meeting.
Thank you.
Okay?
Could we get the information again, whatever the material that had been previously sent out?
Yeah, you wanna,
You mean this?
Well, I've got the KP.
yep.
Is that the only thing that
That's
isn't?
really it.
okay.
It has the wording of the law in here, and that's exactly what it is.
I just as with Georgia, I want an opportunity to review this first.
That's fine.
Yeah, I just need to know when we have the vote, as long as you guys.
Everybody has this
You may
up there,
decide not
KP law.
to weigh in, you may weigh in, it's up to this.
Well, we also don't have to. I mean, we're not required to make any recommendation.
Right.
That's correct, but, yeah, and that's why I said, I didn't think we had to vote on this one at
Yeah, no, I
all.
understand.
But that's fine. We'll take it up at the baby town meeting. Article 9, I don't think there's any action required by this committee on that one. Nor Article 10.
So just to go over 10 and 11. 10 and 11 are veterans benefits. So the town of Stockbridge voted a long time ago to adjust by cost of living, the elderly exemptions. Number 10 brings in that you adjust the veterans one also by that. So that's a very minor cost, but it is a slight cost increase. And Article 11 allows us to basically double the veterans benefits.
Right.
And that we spend about $4,400 from the overlay on veterans benefits. So this would add $4,400 to the overlay. You guys don't vote the overlay, the Board of Assessors do when we set the tax rate.
Right.
We don't think it's really, we have plenty we typically run 50,000 annually for the overlay when we set the tax rate. There's about I thought it was 140,000 over the multiple years of what's in the overlay. So the overlay is solid. So we're not even thinking we're gonna have to increase the overlay to cover this, but it does have a financial cost overall to the town.
How many veterans take advantage of this statute?
8,
Yeah, that's what I thought.
yes.
Well, there again, I don't know if they know about it.
They'll, a lot don't.
Right.
You're absolutely right.
I can speak to Mike about that, about getting it out. I mean, if they're entitled to it, if they're, you know, I do know that the veterans agent, if they work with anybody that has disability or anything else, they're reported to us, but just some of them, some of the lower ones, level ones, right, they might not.
How many people are taking advantage of the elderly tax reduction?
The last, I thought it was around the same number,
Yeah,
but I'd have to confirm with Mike. I can get that for I'll make a note. to
it
get
seems
that
odd, that's it.
time.
And that's held pretty, it's been at that number for a long time. And peculiar. Georgia, do you have any insights as to?
I just don't feel, well, I feel two things, that a lot of the elderly people don't know about it,
Yeah,
but also they feel pride and don't want to take money away from the town. I have an example of that. I had a 99-year-old neighbor who I was taking care of, and I suggested that she apply, and she said, oh, no, absolutely not. I'm sure the town needs it more than I do. So I'm just,
yeah,
but I think a lot of times people don't know about it.
yeah.
I will say that this year, because of the transfer station increase last year, one of the things that the Board of Selectmen set up was that anybody that's on fuel assistance or anything else would still receive their dump sticker at $50 in the previous year. And whenever somebody came in, we sent them to Mike, Blake, saying that if you qualify for this, you might also qualify for the senior exemption. Whether or not they went down and spoke to Mike or not, but if they did come in to show that they were getting some type of assistance, we did recommend them to go to the assessor's office and get the information to apply for the senior exemption.
Do we need to vote on these two articles, 10 and 11?
I think once again, while there's no direct cash outlay, they both have slight monetary.
I don't believe there's any
So
action
if you
required.
guys want to support it, I think it's within yours, or just leave it.
There is no direct cash outlay. I don't think we need to report and do anything at this point. Okay, Article 12, zoning, no. Article 13, a number of these items are capital items. And I guess what we'll do is run through them. And, if anybody has any issues on any one of them, we need to talk about it. Number one, 50.
Jake, could we adopt the same procedure that's adopted at the town meeting? Or if
Does
you want to put
anybody-
a hold, on a particular item, then bring it up.
Look through
But-
Article
but-
13, and if there are any you want to discuss, we'll put a hold on it.
Yes.
Okay, have
What?
some holds
Yeah, that's fine.
when you come to it.
Yeah.
Okay, so is there a need for a hold on Article 1? No. 2? 3? 4?
Hold.
Um, 5? Just 1 second, this is number 4. 6? 7? 8? 9? 10? 11? 12? The clickers?
No,
12 is,
12.
Oh, that's 11, 12, okay. That is for engineering.
Mhm.
Uh, 13, 14,
Hold,
15, 16, 17, and 18. I have three holds here. Okay, the first being the roof for the Waldorf building.
that's my question. Is that for the town offices?
No, that's the town hall roof.
That's-
That's this one.
This building right here.
Right.
So everywhere, that's why I said hold, everywhere,
This town
it
hall, I'm
should
sorry.
say town offices. That article, number 12 and number 14, because we don't have town hall, we have town offices now.
That's cool.
And
Correct.
those articles all refer to town hall, which people might think it's the Waldorf School, and it's not, it's all for this building.
I have no problem calling for a motion, a second, and a vote, subject to change of the language from town hall to town offices. Would that be suitable?
Yeah, I mean, I think it needs to be clear for the town meeting.
Good point.
Okay, so this is Article
Be a long meeting.
13,
4, 11, and 14.
Yeah,
4,
okay.
11, and 13, 4,
12,
and 14.
12, and 13.
No,
14.
14.
4, 12, and
Okay.
To me, that's just a Scrivener thing.
4, 12,
Let's change it.
14.
Yes,
12, 14, language to town offices.
Subject to changes
Subject.
in those particular items. I move approval of Article 13.
second.
Thank you, Georgia.
Okay. Okay, so basically, can I have a motion?
I have it.
He just did. And I
Steve
think
did, and
Jim
Say
just
the first,
I did.
Steve
Okay.
made it.
Jim approved, Jim second.
seconded it.
and Jim the second?
Yeah,
Sorry, so picky.
No, that's a good one.
That's a good
That would have been a long meeting.
Okay,
I wasn't sure.
anybody opposed? All in favor?
aye.
I,
Okay, fine. So that Article 13 is approved subject to.
And I will say, just for information, you have the engineering assessment on why the Chime Tower additional funds were
Right,
asked
yeah,
for. In case anybody was curious.
yeah, it looks,
Article number 14, sewer replacements, any holds on 1, on 2, pump stations, 3, the hybrid half-ton, and 4.
I move approval of Article 14.
I'll second.
All in favor?
Aye.
Article 15. Water surplus. Again, 1, water plant loading dock. 2, Harry and Father's water storage tank cleaning. 3, and number 4, water rates.
I move approval of Article 15.
Second.
All in favor?
Aye.
Nobody opposed. All right, Article 16. This is predominantly CPC. Okay, so take a couple of minutes here.
The cemetery.
It's all CPC.
Number one, the Affordable Housing Trust. Two, Pinewoods deck. Three, damaged siding boards. Four, Rockwell roof repairs. Five, Waldorf High School, this is what I was thinking of, ramp. Number six, the Historic Hearst House. Seven, Library, Museum and Archives. Eight, Chesterwood Studio. Nine, flower beds. 10, open space Revolutionary War Monument. 11, Ice Glen Experience, open space. 12,
You just want to hold?
Gould Meadows. 13, Parks and Recreation, the shed. 14, Elizabeth West Stone. 15, that's CPC budget. And 16, the Historic Community Housing Reserve. Do we have any holds under Article number 16?
I just have a question.
Please.
On number 10, the 33,500 for a Revolutionary War Monument, is that somewhere else also in the budget? Did I read it somewhere else? That amount?
There's a small amount in the general. But
The free cash appropriation that was 33, it's number 7 on Article 13. So that they funded half of it.
That's what I was asking. Yeah, okay, thank you.
I move approval of Article 16.
Second.
First, second, Butcher? All in favor?
Aye.
Aye.
Anybody opposed? Okay. Article number 17. This is one that has come up since we last met, where at the Community Preservation Committee, a request was made for $600,000 from the town's free cash to purchase the right of first refusal for the town to purchase the right of first refusal on 35 Trust Fund held acres adjacent on Interlaken Crossroads. And
can I just clarify that?
Not 600,000.
It's not 600,000.
That is not what happened.
No.
Actually.
No, they just came up with that. They made the request to see if CPC would contribute towards it.
right.
Towards the 600,000, but not 600,000.
The CPC wanted a plan and wanted details, and I was at that meeting, and none of these were provided. So basically, the group of abutters here went and crafted a petition to ask the town to totally support the 600,000 from free cash. Any comments?
I have a couple of questions. Oop, excuse me, Jay. Hang on. Which I'd like to ask before we get involved, before we get into the discussion. One, actually two questions, Mike. Did the select board approve, the 10 and 5 reserve policy that we voted in favor of?
Yep.
They did. Okay. If we were to spend the $600,000 for this purpose, what would our free cash look like?
Our starting free cash calculation would be starting instead of 671,000, would be starting at 71,000.
Okay. Okay.
If I might, I don't think I can hold back. The town is not in the real estate business, okay? And basically, we're being asked to fund the purchase of vacant land, of
They're trying to keep it open as opposed to developed. That's the basic issue.
Yeah, however, that with the thought of keeping it open, this is a precedent-setting issue. And there is nothing relative to legal fees associated with this. There is nothing in this to fund future maintenance cost of invasive species and maintain the property. I think the town would be getting into an area that is really beyond the scope of town government, if you will, because we could set precedent for future requests for this. And I'm not sure we should be in that, in the real estate business.
You're also taking a negative potential income because if it gets developed, there's going to be property taxes out of that.
That's correct.
There's no question.
Right.
Yeah, exactly.
You know, right now we have, I shouldn't say right now, but probably 10 years ago, the assessors did a calculation for us that indicated that close, just slightly under 14% of the land in this town is not on the tax rolls. And taking, 35 acres seems small as compared to the total acreage in town, but every time you remove an acre of developable land, it places a burden on the balance of the property in this town to make up, to your point, to make up the tax differential. The other thing that it does is it raises the cost of land for affordable housing. And what I find curious is that at least one member of the select board is a very vocal advocate for affordable housing, but yet he votes to remove land that could otherwise provide opportunities for affordable housing. A couple of other things about the land specifically. This land borders, its eastern border is along the Tennessee, what used to be called the Tennessee Gas transmission line. It's not exactly great from an open space perspective. The Department of Conservation and Recreation of the Commonwealth of Massachusetts has indicated that this land is not appropriate for open space. We know nothing about this land. There has been no
plan has been developed or details provided.
But
Right.
but I was about to ask Rich, because the land trust may have looked at this a lot closer than anybody else, including the CPC, which had no information in front of it when it had this discussion. What do you got?
Yeah, so just to full disclosure, which I know everyone knows here, but for the public, the Stockbridge Land Trust is not a municipal committee. It's a nonprofit. Our goal is to do two things: help with the conservation of land, but also with finding ways to balance that out with affordable housing and stuff like that. Hence our work with Construct with Pine Woods and stuff like that, because I used to be land trust conservation land. So we had conversations with some community members, but we also had conversations with BNRC, Berkshire Natural Resources Council, and we also had conversations with Laurel Hill Association. The general thing I'll just say is that in the last 3 or 4 years, at the state level, they've made some significant changes on, conservation restrictions. So I'm coming to you from the perspective that the first position that we were asked to take was, would we purchase the land? And the land trust is not in a position to purchase that particular land. The assessed value is $150,000 and the sale price is $600,000. So we kind of guesstimated that the fair market value would be about somewhere between $200,000 and $300,000. And we don't purchase anything more than 10% over the fair market value. So we wouldn't be able to participate in the purchase of the land. That said, that was a similar position of Laurel Hill and BNRC. They're not in a position to purchase something way over that thing. And really at this point, it's really in the town's hands to make a decision on whether they're going to intervene. The land trust can't because there's already an offer on the table and it's up to the town to either match it or walk away. So we then looked at it from the perspective of conservation, in conversations with Laurel Hill and BNRC. The land is wooded land. It has a chapter 61 on it. So technically it is conservable, but based on the new requirements of the state on conservation restrictions, it's not significantly remarkable compared to other lands. And what we looked at was the property next door, which is Craig Moffat's house. That is to the east of the pipeline going towards Hawthorne Road. It's the wetlands. That's a feeder to the Stockbridge Bowl. There's all these different reasons why that's actually conservable land and that's a value. To the west of this property is conservation land that is owned by a private landowner. But this land itself, unto itself, wasn't like terribly remarkable for the amount of money that it was being charged for. So I just want to make it clear that we like to see things conserved, but when you look at it in the bigger scheme of things and all the other things that we have to work on, this wasn't one that registered as a high priority compared to other things that we're working on. So I just want to say that. And so the other thing I'll just simply say is that the land trust said that if private landowners could get together and come up with the money and come up with a plan with CPC to fund the property so that it was just CPC money and then private landowners coming together to create a coalition, and there was a requirement to put a CR on it, the land trust would obviously cooperate and work towards that end. But barring that, we didn't feel that it should be on the town to purchase it outright. So.
Go ahead, Jim.
Well, I've had conversations with, and the butter of that property. And as he pointed out, the gas line certainly is the factor. Wetlands are a pretty major factor on a vast area of that property. So that the developable part of that property is not all that large. And his comment was, we should allow that to be bought by that developer and let him develop it, because the most he's going to get in there is maybe 4 homes.
And that, I just want to reflect that that was largely the sentiment of many of the land trust people, was like, if there could be conservation setbacks on the property, the part of the property that couldn't be developed and other parts that could then be developed, could be developed to that end. That was the general consensus of the land.
Well, some of it just by virtue of the property itself, wetlands, gas pipe, nobody can do anything with those. So you've got a small area, and if you allow a developer to buy that and develop, maybe put 3 or maybe 4, I don't know the exact number, but it's not very many homes. That developer is going to put in 3 or 4 very expensive homes, and they're going to be well-built. And I just, from the get-go, I don't think this town should be involved with buying that piece of property. I think we should be in favor of a developer buying it and helping contribute to the overall tax base of this town.
The question on the floor, go ahead, Denny, you will have a comment.
Yes, I was the person who, for reasons which I can't really remember, who carried the petition, which I did not write, through the town, and went door to door and collected, I think, 12 signatures on that petition. And I did that following a careful look at the property. And I walked it very carefully. I have a background in forestry and land. And the property is 35 acres in a 2-acre zone, and it is thoroughly buildable. And most people who have looked at it have said it would be 15 house lots, unless something happens, in which case it could be considerably more. And there is no wetlands on the property itself. There are wetlands next to it and on the Craig Moffett property. And the interesting thing about this is that it's a piece of a block of a square mile of essentially wild and agricultural land. And the pipeline itself, which we have traditionally looked at as an eyesore, is actually a corridor. It provides open land. It's maintained partially open. It has a diversity of species which are created by the extensive forest edge, which is a rich zone for species. It's a connector. If you can understand that the way it comes over the top of the hill from Campusa Bog and goes all the way down into the Stockbridge Bowl, which does serve conservation values. And that was the way I first looked at it. But I also looked at it from the point of view of the people I spoke to in Interlaken, who were very passionate about the defense of the character of their neighborhood. And they felt that the construction and occupation of 15 plus homes right there would have a serious impact, not just on the sweep across Interlaken Crossroad and then over Willard Hill, but it would also put pressure on the town to spend a lot of money on the old Curtisville Bridge and reopen that for traffic. So there were, and once that's open, then the loop around the Stockbridge Bowl becomes something that would really have quite an effect on the neighborhood. I present this to you and thank you for the opportunity.
What is the pleasure of this committee?
I'll move that we do not recommend to the town meeting the expenditure of these funds.
Second.
Second that.
All in favor of not pursuing support for this article? Anybody
It's
against?
unanimous.
Okay. Okay, Michael, is there anything else we need to talk about relative to the warrant? I have a couple of more points that I need to make
I have one thing to make there.
before we adjourn. Michael, anything else?
No.
Okay. I would remind everybody before,
Yes, we.
Okay.
Georgie, you have
we've already
something?
done another spot.
No, I just wanted him to correct something, but
I would remind everybody, May 14th is our baby town meeting. And as part of the baby town, I would like to find portions of these articles for the committee to present. So that typically what I've done in the past is, as the committee chair, is I review the 2024 Finance Committee report. And then we could have somebody present Articles 4, 5, and 6. Does that make any sense? Would that be something you would be interested in doing?
Why don't you assign the the tasks of doing this. Just tell the people that
Okay.
they're doing it.
All right, here we are. So basically, Articles 4, 5, and 6, I will assign to Steve Schatz, okay?
All of them? I opened
Yeah,
up my
well,
mouth.
that's the,
That's fine, that's fine.
yeah, that's
that's fine.
nothing. And then when we come to Article
You
7,
can do all the CPC ones, Jay.
Article 7, I'll do the Article 7. Article 13, Ed, would you like to do 13?
Sure. The whole thing.
Yeah.
Yeah.
You run through them all.
Well, let's just for the ones that we
We call the
don't,
swan song.
is Swan Song, yeah.
Yeah, just the ones that have hold on them, okay?
Right.
So are we going to give a report in which we just, actually, the selectmen are, the select board members are the ones who are going to,
Yes,
Yes.
and what Gary normally does is he asks what the position of the finance committee is on each
oh, I
of
see.
these.
So I guess my question is, we're not asking Ed to read through every
No,
one
no,
of
no,
those.
no,
I'm
no,
sorry.
no.
Excuse me.
What are
No,
we asking him?
Yes,
What?
on Article 14.
You're saying that we approved all of them, that's basically.
yeah,
Yeah, that's right.
we approved them or we questioned, yeah,
Yeah, I'm reading the whole thing, right?
Right.
yeah,
Yeah.
13. And then,
Because the select board's got to go through that whole process
Right.
of, putting a hold that, do you have a hold that you want to put?
right,
Right, but if he just read them all,
13,
But he's not reading them all.
I'm not reading the 1 through 18, or am I?
Right.
No, you're not. You're just
No.
simply, they're gonna say the select.
Not being read
board-
anymore, George.
And then they're gonna say to you.
Asking the people, the voters.
this is in the baby town meeting
Right,
only.
right.
Right.
no, I meant,
And that basically we support them all and there were the following holds, A, B, and C. I have those designated. I
oh,
can.
well, you don't have to say
I
that.
don't think you need to say
You don't have
that.
to say about the holes.
Then
Don't
fine.
have to.
No,
Yeah.
Then we just make a comment on it, okay? And then on the water and sewer, anybody would like to do water and sewer? Jim, would you be interested in that?
No,
No?
I'm losing my voice.
Pam? 14 of 15?
14.
That's the water, rather the sewer main and 15 is the water.
And the only thing you
Yes,
have to
no?
do, the only thing you have to do is stand up and say that the finance committee voted unanimously to support Article 14.
Yeah.
That's all you have to
All
say.
right, I'll do it then.
And Georgia, would you like to do the CPC 16?
okay. But I still have, a question. We're just talking about the baby town meeting.
Yes, the baby town meeting only. What happens is
You don't have to stand up. You can sit there, Pam.
you're gonna sit right here.
Yeah.
And at the actual town meeting, Gary will go through each of these principal articles and say, does anybody have any comment or questions relative to them? And prior to which he'll ask what the finance committee's opinion is. And then he puts it up for a vote.
Right. So you're going to be telling Gary that we approve these?
Yeah.
Yeah.
I'll do it as we go along with the.
We're just talking about the baby town meeting.
The baby town meeting only.
And I don't have to read all these?
No.
No, you just have to sit there and go.
Okay.
All right.
To approve it.
All right, so that will deal with that. The other announcement I would make is that regrettably, I have learned from Ed Lane that he and his wife are looking forward to being with their daughter and son-in-law in New Paltz, and they'll be moving on sometime after the annual meeting. So we appreciate the efforts that you've given to our committee
Thank you.
in such a short spell. We're going to miss you.
Well,
Only good luck for you, okay?
let me say, I can't say I've contributed very much, but I'll tell you, I have learned a tremendous amount. You people really know what you're doing. I think the town should be pretty proud of what the finance committee does. You guys are just something, I couldn't hold a candle to. I have to be here another 5 years before I could contribute anything like what you guys do. So
Is there any other business to come before this committee? If
Yeah.
not,
Yeah, I have something and I don't know where else to present it. So I'm just going to throw it out there if I may. And that is that I reviewed some of the fiscal budgets and so forth that we've had. And fiscal year 23, 24, and 25 show for pilot income, that's payment in lieu of taxes, 27,000 in 23, down to 11,000 and change in 24, and up to 18,000 in 25. My question to the right people, I could answer it to Mike, but I think it certainly is a finance committee
That's
meeting.
the select board.
Yeah, all right. What has the pilot committee done to get our program to become, the pilot program become more viable?
I don't think there's been a lot of activity on behalf of the pilot committee. And I think basically, Tom Stokes is involved being the chair of that committee. And I think, the select board perhaps should ask, how we improve performance or activity of the pilot.
Yeah, because right now we don't have a pilot. It's just whoever. is
It's
willing to
voluntary.
contribute.
It's not working.
No, it's not working and it's costing this town a lot of money. That's the bottom line and we should be concerned about it.
We recommend a follow-up to select board on pilot committee. Re-pilot. Anything else?
I just have one other question. Should we at the Babytown meeting, because we're televised, talk about Article 17 and how we
Yes.
voted not to recommend?
I'll talk about articles.
Okay, so you're going to do Article 17?
Yeah,
Okay,
absolutely.
thank you.
I'll take the contentious ones, it's okay. All right, anything else, folks? Thank you very much, well done. Sorry, we had a really protracted evening, yes. And thank you, Penny, for your comments, okay? Appreciate it. Thank you.